options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, tap in first. Always want to welcome new subscribers. This is my brief bio. For everyone, you must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. Alone, welcome everybody on YouTube. We have simultaneous broadcast on YouTube and Discord. Welcome. Raska, Cherry, Mark. Welcome back on YouTube. So if you are on YouTube, if you can just click on subscribe. And if you find these videos useful, please hit the like. So just search for the word Tradespoon. But welcome on YouTube. So disclosures are important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept that in order to invest in current market conditions. And I encourage you to visit the link to understand the risk associated with trading stock options, the OCC, Options Trading Corp. Disclosures. I'm not a financial advisor. I'm here to show you what I do in my own account for educational purposes only. All right, before we get into trading psychology, trading somebody else and they can follow it, right? So, that means it needs to be documented. So I encourage everybody to document your trading plan and keep a journal. In the journal, I would write down every single trade I make, and then I would grade myself, A or B, if I didn't break any rules. So before I put in a trade, I have a pre-market routine, a pre-trading routine. So before I place a trade, I go through the checklist. And if I didn't break any of my rules, then I would give A and B when the trade is over, or C and D. Encourage you to do that. So what are the rules in trading plan? One is cash. I propose 30% of your portfolio is in cash. Second is portfolio drawdown, right? You look at the how many positions you have and what is the maximum exposure per position. So I propose to have no more than 4 positions, 2.5% stop loss for each of the positions. And today we're going to talk about, we always talk about in trading, especially in retail trading, right? There is no such thing as high probability of success, high return on capital trades. So as you go through your journey as a trader and based on your own risk tolerance level and your personality profile, you will gravitate either to high probability of success trades or high return on capital, right? High return on capital means low probability of success. High probability of success means low return on capital. So it doesn't matter what service you subscribe or what strategy, that is the decision you have to make. Going back to game theory, sometimes you look for high probability of success trades. Sometimes you look for low probability of success trade with higher elevated probability, right, based on market conditions. But that's important, right, to also keep it in your journal, how you structure analysis. I look at the return on capital. I looked at dealer positioning, right, the gamma exposure, gamma levels. So those are very important concepts. How do you decide 2.5% of account value? These are some of the other checklists that I have, right? I look for ABC patterns, don't sell naked options, always be long and short the market at the same time, but expressing certain, market is in strong bull market. We're in strong bull market, so it makes sense to be bullish, but there's still some position that should be short, right? Either you do spreads, you do butterflies, or maybe do cover calls, mirrored puts, but you're hedging your portfolio. How do you decide then 2.5%? Looking at the spiders. Access to So looking at the spiders, we are trading at 543. You have definitely a gap, right? So looking at first, look at the neural network. If you look at the neural network, which is our emphasis is on AI, so it's financial engineering. So support is at 544, overhead resistance is 546. We're trading at 544, 543, slightly lower. Right, this is the gap after better than expected CPI, right? With rotation, right? Nvidia is down 10% one day, you know, Wells Fargo is down 3% the next day. So rotation. We don't have a sell-off, right? Kind of indiscriminate sell-off. We still have narrow participation, but value stocks were almost at all-time highs, right? And then obviously QQQ is all-time high. So now we have rotation and spike and average or breakout, right? So it's built in, probably built in top at this point. So as long as we're above this 543, 542 level, good morning, Elmark, welcome. Thank you for participating. Rosser, Cherry Blossom, Elmark. So then the path of, then, you know, as long as this would be support number one. So if you're doing day trading, right, 530. So those are, we have seen that the spiders is trading at for today, right? So June 27th, the day still expiration options, which do provide support. But if you zoom out to July or you zoom out to monthly expirations going into the next earnings season, really not much support until 530. So 540 is an important level. If that doesn't hold, I think we can quickly drop to 530. So 2 to 3% to the downside, to the upside. Large overhead resistance, the vol skew is greater than 0.5. So majority of people are buying puts at 530 level, which is a 50-day moving average. Your account, I propose to risk less than 1% of $250 to $25,000. That's $250. So if your stop level is 540, right? 540, right below 540, I would say 5 points, right? So your stop loss is 5 points, and then you divide it. 250 by 4. Make sure that the position is not down more than $250 on day trading to $25,000. If you're doing longer trading, 10,000 would be 2.5%, right? That we are risk averse and we have different asymmetry when it comes to gains and losses, right? We feel different about our psychological bias that we have. We need to be aware of it. That's why journaling is important and grading yourself, right? When you're faced with $500 gain and $500 loss, you should feel the same way on a $10,000 account. How do you make that decision? Or $250, right? Whether you're making $250 or losing, decision is the same. But we know that based on prospect theory, that we usually take the profits of $250, but when we're confronted with $250 loss, we're hoping that it will move in our direction, and then we are confronted with $500 loss. And we that's versus our trade where, yes, when we saw the screenshot below, it was 280 versus, let me just, this has changed, but let me pull that up. It got reset because the market opened, but I did take a screenshot. So there was a very large position at 280 and very large position at 300 pre-market, right? This is open interest, high level of open interest. Notice negative gamma. So dealers have very large negative gamma exposure. That means that when the stock reaches, you know, if it's positive earnings, it can gravitate toward 280 or 300, and then you can act as a repellent, right? The dealers are actually at 280, they are forced to buy, and at 300, they're forced to sell. And we kind of traded in both extremes, right? If you look at our friends at bar chart, we were at 300 post earnings. We were at 300 post earnings. 280, 300 where the highest open interest was, right? And negative gamma, right? So when it's negative, dealers are negative gamma, they're forced to buy the stock, right, as it approaches these strike prices. So we got to 280, dealers bought 300, there's really no other strike, so now we're back to 280. So we're trading between 280 and 300, and that is how we structured the trade yesterday, right? If you look at the earnings power trader, or if you look at the elite circle, I selected 280 is a middle strike for the butterfly. So 270, 280, 290 butterfly, right? That was kind of the idea. And then, so right now, FedEx is trading at 290, right? 290. On the position for $2, right? So it cost me a little bit less than 0.5% to put on the trade, right? Now this is where you're looking for asymmetrical returns, right? Where you risk 0.5%, but maximum gain is $10, right? So I'm risking $2 to make $8. And let's see what it's trading at right now. So last 250. 250, let's see if I can sell it for 25. Let's do a credit off. So I put it on for $2. Let's do $4. Let's see if I can close it for $4. Or I can do it as 2 trades, right? The other solution is to put on as the 2 trades. You know, try to close to 70 to 80 for $9. Let's maybe try that. Manage position. Instead of that, let's break this spread into 2. So let me try to sell 270 and 290. It's trading at credit of $9, right? So let's see if I can sell it for $9. Okay, I actually was able to sell it. All right, so 270 to 80 call spread. Is already in the money, right? So I closed it for $9. Probably can close it now for $9.20, $9.30. So now I'm left with the 280, 290 call spread, right? It's a 2 spreads. If you look at the profit and loss of Butterfly, I selected 280 strike because of the high open interest. And the theory goes that if you have very high open interest based on volatility skew, it can act as a magnet or repellent. In this case, it acts as a magnet. It got to 80 to 90 level. And then these are the 270. Basically 2 spreads, right? One is the bullish call spread, right? This is a bullish call spread. And this is So this is bullish call spread, and this is bearish call spread. They happen to have same middle strike, right? That second strike, the short call counter, but and then it goes back to probability of success versus return on capital. You would have to pay more, close to maybe 1% of underlying stock for this condor, but then your probability of success would increase. So this is where there's always offset between probability of success and return on capital. So I got filled on any questions on condor. So I did get filled on the spread, FedEx. And now I'm trying to close 290 to 80 spread. So let's try to close that. Let's see what it's trading at. 280 to 90 close. Okay, so now I have, what do I have? 280 to 90 call. So I'm closing 280 to 90 call. This is a bearish call spread, and I want to close trading at $6. So if I close it for $6, so I'm going to make $3. Let's try to close it for $5. Oh no, 9 minus 5. Yeah, my 9 minus 5. $4. Okay. So 50 basis points, Germany down, Jets are down 1.5%. So it looks like value stocks continue to underperform, right? We did triple top, right? This is important overhead resistance. We failed to break through the slab. Conductors are also pulling back at all-time high. 3 days in a row, lower lows, lower highs, considered to be a bearish price pattern, and we're slightly down. So FedEx, let's see. All right, so I closed it for 9, and it's trading at 5. So that's kind of would be my trade, right? Trying to close for $5. So now we can watch and see. Let's see, where is it trading at? Let's do maybe 550. It's getting close. So it's trading 530. Fine. Okay, let's do 5. All right. So I'm just watching this trade. So you can close it as a butterfly, or you can close it as a C5. Okay, let me change it to 5. Right, 280, 290. So right now, trading maybe at $6, midpoint, natural bid and natural ask. All right. Kirill, Vlad, Faz. Good morning, Bob. Good morning, Scott. Step away, Scott. Yeah. So NVIDIA. Let's talk about the FedEx. Usually I wait 15 minutes, right? And you do have a lot of overhead resistance because this is year-to-date high. Was facing was this level. So this is 2024 high. So maybe it needs a little, push to close at that level. Let's see. But okay, well, right, there are a lot of comparison being drawn in March, where same price action, so the volume is, but still volume is less, but above average. And then you had 2 days in a row, then we rebounded, actually get close to all-time highs again, and then pull back. Earnings season start, I would say the top is set. And here we did 10% pullback. Sorry, 20% pullback. We pulled back 20% last time, 22%, and this time we pulled back already 15%. So very similar price action, right? So maybe another 5%, right? 110, 115, but probably now trading sideways, at least short term. Plus, from seasonality point of view, usually, during elections, June, July is good, but then August, September is not. For semiconductors, usually also, last year was similar price action. I mean, seasonality doesn't have to repeat itself, but strong earnings, and then still had July was higher, right? We still had another leg up. I mean, I don't think we had that reversal back in 2023, but you can see volatile price action going into September and October. So we have elections year. Seasonality is a little bit different, but still probably a factor, especially with this risk reversal. In terms of positioning, okay, I can close first. Wait, what did I put in? One more time. Trying to figure out what to do with FedEx. Cost me $2. So that's the NVIDIA. Thank you, Scott. Trend down longer. Well, yeah, I mean, this is a bearish price pattern. Last time it took all the way to, till next earnings of NVIDIA to break out. It could be the same price action where you have to wait till at least August 15 to have a breakout or breakdown, right? Well, based on the earnings. But the sideways price action probably will last at least till, well, definitely NVIDIA didn't go anywhere until the next earnings. So similar price action till next earnings, it could just be trading sideways. Any other questions? Any questions on Discord? Letter Trades is back. Welcome back. So in terms of other signals, you can find them in term. So you can find them in HIG, Marathon Oil, and Royal Caribbean, RCL. Right? You can find this similar information in aggressive power trader. Sometimes there's more. So same thing, MRO, RCL. You have suggested entry price, suggested exit price. Somebody asked me, what if I only trade options? I mean, it depends on how they're available, right? So we do suggest that we give you different strike price and expiration months that you can trade, but still I would use these guidelines as your entry and exit point for stock or options. If you're doing short-term trading, right? If you're holding longer, then this is optimal entry price, but you want to wait at least 15 minutes. So same thing, I would put RCL. Okay, so $1.2060, so maybe 580. I mean, you can, if you have time to watch FedEx, you can do it. Have hard time, so 70, so 580, maybe $6. Let's try to change it to $6. Change it to $6. Still waiting. All right. Any questions? It was the low for FedEx. So strong price action in Royal Caribbean after the Carnival cruise. So you wait 15 minutes. I mean, you do have a breakout level at 157. Okay, looks like I got filled. Yeah. So I received $3 credit and paid $2 debit, right? So 50% return overnight. So not 100% return, but you can wait, right? I guess if you think that FedEx it's gravitating toward 290, it's gravitating toward that middle strike. Actually, in the midpoint between the two strikes, 280 and 300. But that would be the setup, right? Where you are looking for triple-digit return. In this case, it's 50%, but sometimes you look for higher returns. Any questions on FedEx? All right, now we can concentrate on RCL. So RCL cruise lines are in strong uptrend. I did close TJX. I don't really have retail sector. You do have a clearly, I mean, if it does drop below 156, I would be out. So maybe risk 2%. 2% stop loss if it reverses all the gains. So let's put on this trade. It's more than $250, right? So $3, maybe, So $3, so maybe 30 shares, right? Then you want to make a decision, right? Do you want to hold longer or not? If you're more conservative, obviously you would use 50-day moving average because you had a previous breakout, which was in May, right? 150. Then you would have to use maybe 9 points, which would be 6% stop loss. You can use 5% stop loss. You can use 2.5% stop loss, right? Those are some of the suggested target gain and stop losses when you look at these services. Right, active trader is 1%. Weekly trader is 2.5% stop loss. Because the idea is, you hold it on longer. So it depends on if you're doing day trading or you want to hold this position a little bit longer. I'm gonna probably, I like the price pattern, so I want to hold it a little bit longer. So maybe 2.5% would be kind of the stop loss. All right, so, and then I would look for 1% gain, maybe on half of the shares, which would be $1.50, would be $1.61, right? $1.61. So maybe exit out at 161, right? That would be the high. Yeah, so 161. If it revisits all-time multi-year highs, and if it breaks out through multi-highs, then I would look for 162.50. So that's how I'd use active trader or aggressive power trader. Right? Usually I wait 15 minutes, find some kind of a support. And then I would enter the trade. So you can find these trades either under aggressive power trade. If I do trade these signals, you would find them under orders, right? Or you would find all of them under elite circle, right? So they're all in the same place. Trade active trader, weekly trader signals on Tradespoon side, or how to trade aggressive trader, weekly trader on yellow tunnel sides. TLT. To the interest rates, right? So today is Wednesday, new home sales at 10 a.m. They've been kind of down. New construction has been down, permits, kind of forward-looking indicators. We'll see if the new home sales are also trending lower. So that's GDP revision. Initial jobless claims continue to kind of slowly rise, right? So that's also could impact the market. So that's Thursday, and then Friday PCE data, which is preferred measured by Fed. So in terms of interest rates, looks like yield, it's trading in this box, right? It has hard time breaking through the 535. Below 50-day moving average, below 200-day moving average, but extremely oversold. Looks like it's building a bottom. It's not breaking. I think it's a pattern of higher highs and higher lows, right? But volatile, right? Interest rates have been volatile. So it's oversold short term. I would look at this box first, right? This has been a box for quite some time. And obviously sometimes we break above that level, right? Based on macroeconomic data, we could and see if it breaks out. But I think it's still pattern of lower highs, lower lows, because inflationary data is going in the right direction, slowly, but in the right direction. And now we have a risk that unemployment can tick up. right? So that means TLT is going higher. MRO is being acquired. Let's see. That I'm not sure. Maybe, I mean, it doesn't look like it's been acquired right now. June 12th. Yeah, I mean, not sure. Yeah, I don't see. Not sure. There's a big volume here, so maybe there are some rumors of MRO, which I missed. May 29th. At least rumors of acquisitions, because it's still volatile. So maybe right, MRO and just rotate, other name maybe. So 906. Let's talk about Micron. Is so let's look at Micron. Question was on Micron. So similar to FedEx, right? You have this large negative gamma. So if they do have the highest concentration is at 170, right? If you look at July, you do have less calendar spread. So people selling, buying calls and maybe selling calls further out. So you do have a lot of calendar spreads, but still negative gamma, at least in weekly options and financing with puts. So it looks, under 0.50. So same thing, I would, yeah, I do have Micron. So I would gravitate towards, right, the question, do you want to be long or short? On AI stocks in general right now, I don't know if you want to be short volatility, right? Sell premium, because they either hit a home run or they get a strikeout. And Micron did pull back a lot, so it could get back to what's the highest, 155. So let's look. Micron. Let's look at now we looked at the position, and now I'm looking at the implied volatility, estimated move, right? It's trading at 142. Was, FedEx, I actually probably should have selected 290 based on the implied move. But anyway, 142, 10 plus 10 is 20, plus another 20. So $40, roughly $40, and 2 standard deviation implying $40, which is 20 plus 20, 40. 40 is, right? So So that's 180. So you have this high open interest everywhere, and then the peak is 170. The implied volatility move is close to $38 would be to 180. So I'm gravitating toward 180 as a middle strike, maybe a little bit more. So let's see, what is it trading at? And then same thing for the puts. So Micron, let's see, let's do butterfly, directional butterfly. Let's do $5 strike intervals, $5 strike intervals. Okay, let's start with 10. It's pretty volatile. So if I select 180 as a middle strike for that butterfly, trading at 50 cents. So 50 plus 50, again, 75 basis points. So I think 170, 180, 190. I mean, we had 38, so yeah, 180. Yeah, so 180 is at all-time high. It's all 180. What is 180? No, that's percent move. On Micron. So I mean, a lot of expectations. So let's just double check the math. Trading 142, so 20, 30, yeah, so about 38. I'm doing at the money straddle, at the money strangle. So that would be 138 strike, 180 strike. Okay, so maybe I put 170, 180, 190 call spread for 50 cents. 45 cents. $0.50 the call spread. Put spread, obviously, there's no hedging, right? There's no hedging all the way till 115. So no one is hedging. There's some selling of the puts. So any negative news from Micron, and you will have a sharp pullback. We've seen that with some of the semiconductors, like Taiwan Semiconductors, super microcomputer, this earnings. So I would do the put spread as well, right? So if this 180 strikes, $38 to the downside, 40, probably this strike. Let's see. So let's do $10 strike difference. Oh, 120. Let's see. There's less demand, so maybe. No, yeah. So butterfly. For 50 cents, that would be 120, right? So 120. Mm, 115. So 115. And 40 would be one of, so it'd have to do a 105 as a middle strike. Yeah, 105, 95, 105, 115. You can buy for 40 cents. 0.45 cents. Okay. So So I'm basically, again, looking for these asymmetric returns with the idea that probability of, especially AI stocks like Micron, moving 2 standard deviations is elevated, right? Usually it doesn't move 2 standard deviation, but now there's a lot of demand, right? There's a lot of, there are people that think that it can be, some people think it could be $200 stocks, some people with high open interest, let's say August. Yeah. But you definitely have very large position at 170, and then based on implied volatility of $38, that would be 180. So I think it's going to gravitate. If there is a positive news, it will gravitate toward 180, and if there is negative news, somewhere between 100 to 120. There's really no support until then. So if they miss on any of the metrics, it could be down, 20%, right? And if they hit a home run, they could be up 20%. Similar setup to last earnings season, right? So last time they were up 20%. So that's what people think is going to happen this time as well. New home sales down minus 11%. So let's see. Let's see. Amazon. So let's see how that impacted, if it impacted the markets or interest rates. So interest rates are going up. Not very, if new home sales are down, in theory it should be not rising, but TLT is down, then flat, semis are flat, spiders are flat. Small caps fighting for the 200 level. So for now, no large movements in the market. All right, in terms of other positions, let's look at the other positions. I trimmed the position yesterday. It's pulling back together with the banks. If it reaches 50-day moving average, I would buy again, right? I did kind of trading around this position, but I think this is a healthy consolidation. Probably will, potentially can rally into the earnings. General Electric, same idea, right? The industrial banks, they're very highly correlated, almost it's very similar price pattern. So I would be a buyer into pullback. FXI, so China. Get inventory numbers from energy. Let's see. So FXI kind of consolidating, right? Not going anywhere for the months of June, flat. And then energy is pulling back. HPQ and Microsoft. So HPQ pulled back today. I have a stock. I did trim the position. It's pulling back. I would watch the gap for now. As long as it's above 34, I'm fine. I did trim half of the position, so right now maybe if it does reach 34.40, consider maybe adding. But now HPQ is pulling back. Texas Instrument is staying at 194, kind of consolidating, not going anywhere. I do have a spread, so that's the one that I have to make a decision, because if it's a stock like HPQ, I have time. With the July spread, I only have 3 weeks left basically to make a decision. So it's ideally if there's a leg down or a leg up, close the trade. Microsoft is trying to break out to all-time highs, kind of not pulling back. So It just needs one good news, and I think Microsoft can also break out. We talked about Google breakout yesterday, right? So Google broke out yesterday, 2 days in a row, right? Bob asked, do you wait 2 to 3 days? Yes, but today it's on breakout, and maybe Microsoft follows. Silver, NVO, NT. So silver is consolidating, trying to reclaim 50-day moving average. It's retesting the June lows, but still I'm bullish on silver. NVO broke out. It's a yesterday's session low, but still looks like as long as the gap is not closed, today, if tomorrow the gap is not closed, then maybe this is a breakout. So I'm long NVO, long silver, Texas Instrument we talked about, and AT&T. AT&T is doing ex-dividends, so just consider maybe trimming the position, right? It's kind of losing momentum. I closed half of the position. There is a large volume at 19. If it doesn't go higher, maybe just close the position and move on to the next one. Up about maybe 0.5%. Let's see. What did I do with AT&T? Maybe I'll just close it. So I bought it at 18.59. It's 11 cents. So it's almost 1% in a couple of days. I'll just close the trade. And cover calls, then I wouldn't worry about it, right? Because you can collect premium. But if you're not, then I would just move on. I mean, it's almost 1% gain in a short period of time, so I'm out of AT&T. And the problem is with AT&T, there is a large position at 19, very large, with the positive. So this is positive gamma, right? So you have positive gamma. So that means that dealers, as it approaches 19, dealers will be forced to sell the stock. So you can squeeze maybe another 1% out of the stock, but between ex-dividend and large position at 19, you have to be careful, right? So there's really not much overhead resistance, but that would be my trade. Yes, so there's an inverse relationship between TLT and 10-year yield. Yes. Marathon oil agreement. Yes, thank you, Bob. Carol, thank you. Kirill, thank you. Calendars. Bob, if you're doing bullish calendar spread, right? I mean, I would select the same strike prices on Micron, right? The question was, instead of a butterfly, what about calendar spread? Well, the idea that based on 2 standard deviation, and last time it moved 20%, which is $30. Now it's kind of 30. The 2 standard is 38, and FedEx actually moved exactly 2 standard deviation today. So I'm gravitating toward 180 strike, right? 180 strike. So 180, maybe 185, give yourself a little bit more room, right? But you can sell 180, this week, and buy 180 3 weeks out. Right? So that would be the calendar spread. But I think you have a large position 200, large position 160, and 2 standard deviation is 180. So I think that. Does the longer duration strike increase more than the short duration? So by what percentage? I mean, if I understand, Bob, your question correctly, but it could, in the next 3 weeks, it could be somewhere between 160 and 200, right? It all just depends on the earnings, and vice versa, right? It could be at 100 or it could be 80, right? But there's very large expectations, especially with the recent pullback, right? Especially with the recent pullback, everybody's on the edge, right? Because Micron just pulled back from the top. How much did it pull back? It pulled back 15%, right? So you could, without any news, right? So now you have news, I mean, it could pull, but it could move 30% up, or it could move 30% down, right? 20 to 25% move. It could move 20 to 25%. All right, Discord guys, thank you very much. You guys are awesome. Elmark, thank you for participating. And on GoToWebinar, thank you. On YouTube, please hit subscribe. If you like the video, please hit the like video. We like likes. And I will see you guys. Scott is doing the closing bell, so we do have another about calls. Bob asked, he's bullish, so we were talking about calls. I personally doing both because I don't know if it's going to go up, right? So if I'm doing both puts and calls. Thank you, Bob. Thank you, Carol. Faust, thank you. Shabbat Shalom. Carol, thank you. Thanks again. All right. Thank you, guys. Take care.